Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, here we go, Philip. It's August. It's episode 50, if you can believe we've already done 50 episodes this year, and you're back from your holidays.
Yeah, a little short break over there in Porto. It seems like a long time ago. I think I got out just in time before the weather got a little bit too hot. I did get a telling off for walking 10.5k without any sun cream on in 24, 25 degrees. So I came back a little bit redder than I went.
And also before air traffic control went down.
I did get back, luckily, yeah. So, but it was a fantastic break. But we must give a huge thanks to David Billsborough, Cheshire Cars, who I do owe a phone call to as well. But he stepped in last week, and I think you quite enjoyed that one, I think, Curtis.
David was great. I mean, we had a good old natter before and after the show. Most of it, I must admit, was about music, but we did talk about the car retailing sector for the pod, yeah. And great insight from David because he's been running his business for 30 years now, and was a car retailer before that. Yes. And a lot of insight there on the used car sector. So I join you in thanking David, and he's welcome back anytime we're on holiday.
Yes, we can come on whilst we do it as well. We should get him back on as a guest at some point. But fantastic shout out. And the other thing this week, and you'll notice in today's headlines before we get into some of the other shout outs, that we've nothing on the Supreme Court announcement that was on Friday at 4:30 from the Supreme Court. We've left it out of this week's headlines intentionally, so rather than trying to cram something in and get on the back of any speculation, because the Supreme Court, the announcement is on Friday at 4:30 intentionally, that it's after the market closes, also on a Friday, so that gives opportunity for the weekend for the sector and the market to digest the detail on the findings. So we will cover commentary and a little bit more on that on next Saturday's podcast. So you will notice that we've not got a story this week about that one because it is so early, and obviously there's such a significant moving announcement. So we'll have more on that next week.
Yeah, absolutely right, because I don't think we'll really start to see the industry reactions until, well, maybe over the weekend, but certainly from Monday onwards. So we'll scoop up those for next weekend's pod. But on today's show, we do have an extract from an interview we did during the week with CAP HPI's Chris Plumb. And Chris was discussing July's trade values. Now, the full interview, it is in your podcast feed. And as well as having more details on July, he also gives some insight into the implications of the electric car grants, how that may affect used values. And also, this was a fascinating one. I was keen to put this one to him, how CAP HPI goes about setting values for the plethora of new brands launching in the UK. So he had some great observations on that.
And lovely little segue into the next shout out there. And in the second half of today's podcast, we've done something a little bit different, because we had the opportunity to catch up with Nick Thomas, and Nick Thomas is the UK MD of Changan, who we've mentioned a couple of times on the podcast, who are set to go live in the UK with their first cars on sale in September of this year, so ready for the new 75 plate. So stay tuned for the second half of today's podcast. We've dedicated it to this exclusive podcast interview there with 25 minutes with Nick Thomas, that will talk you through their plans, the go-to-market plan, a little bit more about Changan and who they are, etc. So please stay tuned for that one in the second half of today's podcast.
And next week, we have another exclusive. It's actually our first interview for a couple of years with John Hanlon, friend of the pod, MD and founder of Waylands. And we caught him at a busy time for the group because it's expanded further west. It's taken on 3 new franchises. So John filled us in with what's been keeping him busy over recent months. And it was a timely update on the group and the group's plans over the sort of medium, short, and long term.
Yeah. And he managed to sneak a little bit of a holiday in with Mrs. O'Hanlon as well. So
Yes.
yeah, but all going on in John's world.
Yeah, and that'll be in your podcast feed early next week. So do look out for that one.
You're listening to the Motor Trade Radio podcast, powered by Motors.
So headlines which we'll cover in the first half of this week's pod come from AM, Motor Trade News and the Daily Telegraph, starting with used EV prices rise as buyer interest surges following the electric car grant announcement, reports Motors Market View analysis of July's car retailing trends. Car manufacturer-backed used car programs are falling short of delivering expected returns, according to a new survey by INDICATA. And some Stellantis brands may struggle to qualify for the full electric car grant because their batteries are manufactured in Poland. And that's because coal is still heavily used in power generation in Poland. And dealer group boss Peter Vardy is launching a new tech and investment business as part of a diversification strategy. But first up is that extract from our exclusive interview with CAP HBI's Chris Plumb, taking a look at July's trade values.
Yeah, no problem. So July showed recorded a 0.5% to 0.5% movement down, which equates to circa £95-100 at that 3-year 60 benchmark profile. This represents the joint third smallest or most positive decline when we look at those historical movements from July to August since we introduced CAP Live back in 2012. But of course, that's when we exclude the usual CAP or the usual COVID-affected years of 2020 and 2021. The only years that sort of beat this year's movement was 2022, which was a small drop of 0.2%. And then last year, it was a small drop of 0.4%, with this year being tied to 2017, with the third, being the third strongest month that we've reported. So that resilience in the market has continued.
And how does that now look in terms of the year-to-date position? You know, it seems like we're getting a softer depreciation, particularly in sort of Q2 as we enter Q3.
Yeah, we're kind of seen, it's been really encouraging actually when you look at where we've been performing versus previous years. So when we look at each month's movement in isolation, if we exclude March, when our monthly product movements aligned with the average seasonal expectations, every month this year, including now August, has performed better than those seasonal norms. Particularly when you look at the summer months, have performed more favourable. With August, let's say that three-year-old point, a movement of 0.5%, aligned with actually being 0.5% stronger than the seasonal average of -1%. And this is the second consecutive month we've seen this level of outperformance. The consistent trend suggests, again, underlying market resilience driven by that shortage of desirable stock, as supply and demand currently appear particularly well balanced.
And Chris, we'll look at fuel trends in a moment, but before we do, were there any notable price movements by age points over the course of the month?
Yeah, so values did drop across all of the age points. So when we look at the 1 year point, the average movement down was 0.7%, which is about circa £200, while 5-year-old vehicles saw a decrease of 0.6%, or just £65, and at 10 years old, vehicles experienced a larger decline of -1.4%, but in monetary terms, that only sort of came out to £50. And some of the bigger movements we're seeing in percentage terms across those older age points are really similar to what's seen in previous months, mainly driven by higher mileage, lower quality vehicles in the market.
And how did the various vehicle sectors perform? Because I did notice it was a particularly good month for convertibles and supercars.
Yeah, so convertibles and supercars were the only vehicles to exhibit positive average movements this month, both recording an increase of 0.2%, while sports remained level. Interestingly, coupe cabs recorded their first negative adjustment of this year, declining by 1%. However, that's quite a small sector now. I think it's only driven by one or two vehicles within that. Convertible, even though it was a positive movement of 0.2%, the performance has been reducing over the last couple of months, kind of more aligning with some of those seasonal movements as we sort of, I don't want to say head out of the summer, I don't want to wish the life away.
Yeah.
But as we know, that the performance starts to sort of tail off as we get to the end of the summer months and into autumn. So it certainly seems like that's happening. But when we look across some of the mainstream sectors, sort of city car recorded the largest movement, again at the 3-year point, down just 1%, though again in monetary terms it equates to about £60. SUVs remains the most dominant in terms of the research data that we've received in July into August. So about 40% of vehicles aged up to 20% now, up to 20 years within our disposal data are SUVs, and that jumps up to 65% when we look at vehicles just up to 3 years old. And that sector recorded an average movement of minus 0.9 or £180 down.
Well, that's it, Curtis. Summer's over.
Yes, it's official.
No, I mean, again, wanted to share quite a bit of that extract with you today because I think there's quite a lot to cover. And as Curtis said earlier, do listen to the full interview with Chris. It came in your podcast feed earlier in the week. I think it was Thursday morning. In your podcast feed, where we do talk to him, and Curtis rightly, went into the detail and asking him about setting residual values and forecasting values for the new entrants, and how they go about that, which was a great chat with Chris there, wasn't it?
It was, yeah. No, Chris was on great form there and did share a lot of detail on July, which is very much steady as it goes. I mean, there's a lot of stability in the used car market there in terms of values.
Exactly. But we'll get over to headlines now. So heading over to AM Online, and as Curtis said, used EV prices rise as buyers' interest surges following electric car grant. That's the ECG grant. Now, this is the prices rose, according to the market view there from Motors, by 3% in July, overtaking hybrids for the first time since February of this year, and saying that the increase follows a surge in EV searches after the government's announcement, which I think was the 16th of July, if I remember correctly, for the new electric car grant. And it's great because there's some figures in here to support the findings.
Yeah, definitely. And I did work with the team on this particular press release. And what they found was the average price of a used EV was up, as you say, 3% in July to £24,949. And that was actually up £771 month on month, marking the second consecutive monthly rise. Now, although used vehicles were not included in the grant scheme, as we know, that the announcement drove a significant amount of consumer interest in EVs across the Motors platform, and this is something they tracked very closely. In addition to that, nearly new EVs saw the most notable change, with listings actually up 7% month on month, and average prices rising 3% to just over £32,000, with EVs aged 2 to 5 years also increasing in price by 3%, reaching £24,324. And Lucy Tugby, marketing director at Motors, talking about this specifically, said, we did track a significant rise in EV searches triggered by the electric car grant announcement, with buyer interest raised, even though used cars were excluded from the scheme. An influx of defleeted models under 2 years old also generated plenty of online activity. And Lucy went on to say that the average price of a used EV increased July. It was still 8% lower than 12 months ago. So some interesting context there. So, okay, they're up, but still 8% lower than 12 months ago.
Yeah, and there's always a lot of data in this market view, so we'd always urge you to go over to the Motors site and check the details in the Motors view. But the piece does go on to say that as I said earlier, that the used EVs outpace hybrids in value, with an average price recorded at 24,681. As I said before, it was the first time since February that EVs held a higher average price point than hybrids. Across the wider market, as Curtis alluded to, the market was stable. The average price of a used car on Motors rose by 2% to $17,522, an increase of just £343 month on month, but a 1% year-on-year increase. But it does go on to say that the average stock levels held by the market was 50 units per dealer, and whilst the average days to sell remained unchanged at 31 days. So always good insight in this, isn't it, Curtis?
Yeah, definitely. As you say, the full report is available on the Motors website, so do head over there to check it out.
And sticking with AM Online, and this is the approved used car programs failing to deliver return on investment, and this is from an INDICATA study. And I think you found this one quite fascinating and sort of shocking in a way, because this is looking at the UK and Europe, and looking at that, as I said, the return on investment for the approved used schemes from the manufacturers.
Yeah, shocking, but possibly not unsurprising, because the report, as you say, does look at those car manufacturer-backed schemes across Europe, and the report shows that they are falling short in terms of delivering the expected returns, despite outperforming independent dealers in many key metrics. So the research analysed 73 manufacturer franchise networks across 12 countries, and significantly that included the UK. And it found a consistent gap between investment and performance. And it does illustrate this by saying that on average, manufacturers invest £950 per unit into remarketing and certifying their pre-owned programs, yet typically only generate £388 per unit in terms of returns. Now, in the UK, where approved schemes are often viewed as a key tool for supporting new cars and residual values, the INDICATA's findings raise questions about network execution and pricing strategies.
Yeah, and there is a piece in this, and I've had sight of the report from Andy Shields at INDICATA, but at the end it does sort of say that there's a call to action from INDICATA to the OEM, saying that the study concludes with this call for manufacturers to address underperformance through a focused three-step plan. One being acknowledging that despite outperforming independents, most used car programs are not delivering adequate returns on investment. And two, that to improve performance measurements with clear KPIs such as brand share growth and residual value uplift. And finally, enhance execution at network level by helping dealers improve pricing, stock management, and operational processes. And I think you and I were talking before today's show that we're aware of dealer groups in the UK that actually don't use their manufacturer partner approved schemes because they have their own. They manage their own approved scheme, and maybe that's maybe this is one of the reasons why. I'm not so sure.
I think so, and there's a telling comment from Andy Shields, Global Business Unit Director of INDICATA, talking about those manufacturer-approved schemes, saying most networks are leaving significant value on the table through poor execution and a lack of proper performance measurement. So it really is down to getting those basics right, which may not be followed through in a lot of those manufacturer-owned schemes.
Exactly. And heading over to Motor Trade News now, Peter Vardy shifts focus to global mobility and fintech ventures with new investment group. And this is that Peter Vardy has launched a new venture, Peter Vardy Global, focusing on automotive SaaS, mobility, innovation, and fintech investment. And I mean, Peter never stops, does he, thinking about those next opportunities and everything else. I mean, he's continues to look at other areas, doesn't he, and diversify what he previously was as a motor retailer.
Yeah, definitely. And you referenced SaaS there, which is software as a service, which is one of those buzzwords that has been kicking around the industry for probably the last, I don't know, 4 or 5 years. And it's one of those terms, I must admit, Phil, I do struggle to get my head around, but it's all to do with
There's a lot of them.
yeah, exactly. It's the high level of automation now involved in new cars, isn't it?
Yes, yeah, and I said, the Peter Vardy has been diversifying. We know in previous years, he's sold off some of his operations. He is maintaining and retaining their Porsche centres, and they are redeveloping their investment in their world-class ventures there. So, we think Peter Vardy's, he's still got his Porsche operation, but he's, as I said, he's diversifying into other areas. We know he did the Silver Bullet, if you remember that one.
Yes.
Curtis, I think he was behind the Silver Bullet back in the day there. So yeah, I mean, great opportunity here, but he's always thinking of that innovation and tech area is Peter.
Yeah, and you know what, Phil? When I was reading this story, I had a bit of a wake-up moment because I remember reporting about Peter Vardy launching his first sites in Scotland, and it was 2006. So that's nearly 20 years ago. And there's a quote from Peter saying that the last 20 years were about building value and contributing to society. The next 20 years will be about doing both, just faster, further, and with even more purpose. And there was me still thinking about Peter Vardy Group as a new business.
Certainly not, no. And our final story today is over to the Telegraph, and this is kind of on the back of, obviously, the ECG that we mentioned earlier from the motor story there, and that Vauxhall owner risks exclusion from Labour electric car scheme, saying that the car maker may be punished for its reliance on overseas battery production. Now, you do need to read the story, don't you, to get the real context behind this one, Curtis, because it's not quite as black and white as the headline might infer.
Yeah, I mean, as is sometimes typical of the Daily Telegraph, it's a very loaded headline, and you could be mistaken for thinking that Vauxhalls will be excluded from the electric car scheme, but that's not actually the case. So you dig a little deeper into the story, and what it's actually reporting on is a number of models that are built in Europe, but use the batteries that are produced in the Stellantis plant in Poland. Now, Poland is a big user of coal in power generation, so that's where it's going to fall foul of the electric car grant, which looks at the way batteries are produced as well as the way cars are produced, and it does factor in the energy used for both car production and battery production. So, what does this actually mean? Well, that they've actually narrowed it down to a handful of models that might be affected by this, and they are the Jeep Avenger, the Fiat 600e, Alfa Romeo Junior Electrica, and the Abarth 600e. So, an interesting story, but slightly misleading, I'd say.
It is. I think, we touched on it with Chris Plumb on the catch up with Chris from Cap HPI, and there is a I don't know. There's different reports that suggest we'll have a defined list of vehicles that are included or excluded from the grant, in depending on which tier, whether that's tier one or tier two, by the 11th of August. But I think there's some confliction in terms of
Yeah,
whether that will be the case
yeah,
or not. We don't know. But I think clearly what has already started to happen is manufacturers are coming out with their own incentives, and you'll hear a little bit about that from John O'Hanlon on the interview with John from Wayland's next week. So there's a lot happening around all of this, and there's a lot of speculation and things like that, but nobody's clear. I've not heard one. Have you heard any that have actually got the grant?
no, no,
Do you
and
think it would have been shouted about, wouldn't you, if you did?
yeah, exactly. Yes, yes. Because presumably the manufacturers are just starting to know which models will apply, but they'll know anyway, won't they? They'll know which of their models will apply for the tier one or tier two of the grant. But
Yeah.
no one's broken ranks as we record this.
Never know. You never know. But it is I would, again, when you get your newsletter on Monday morning, do have a look at the link and have a look through, because there is some interesting stats and around that whole global manufacturing space of where vehicles are, where they're reliant on product, etc. So please do have a look at that one. But that's the headlines in this first half of today's podcast. But we will be back after the break with our exclusive podcast interview, as we said earlier, with Nick Thomas, UK Managing Director of Changan, and the new Chinese brand coming to the market next month.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
We're delighted to welcome this week's special guest, Nick Thomas, UK Managing Director of Changan, to the Motor Trade Radio podcast. Changan will be a new name to many listeners, but it's a well-established brand in China and throughout Asia. The car maker launches in the UK in September, in time for the 75 plate change, and Nick has been with the business in a European capacity for 18 months, prior to which he held senior UK and global roles at Nissan and Ford. Now, what makes Changan different to many new entrants is that it already has a presence in the UK with an R&D centre in Birmingham, which has actually been operational for 15 years. With the brand just weeks away from launch, Nick's going to share some of its strategic and network plans. So welcome to the podcast, Nick.
Thank you. Great to be here.
Great. It's great to have you on. And I know I'm very interested in hearing this interview, as many of the listeners will be today. And I know you are very, very busy, Nick, at the minute, I think, are you? It's as the build-up and everything going on.
Yeah, it's an exciting time, but it's certainly a very busy time as well.
Yeah. So as Curtis has sort of done the intro there, and many listeners, as I say, it could be fairly new to listeners in terms of the brand. Do you want to, for the benefit of the listeners, can you give us a brief background of Changan and how established it is, how big it is in business in China and the more international global space, and potentially which operate in international markets it already operates within?
Sure. As you say, we're not very well known yet. That's something I'm in the process of trying to change. Globally, Changan is a big deal. So we'll sell about 3 million cars this year. We're in the top 3 or 4 manufacturers in China. And actually, of those, we sell about 1 million units around the world outside of China. So that puts us very much in the top tier of the Chinese companies. Changan's a very old company. We've been around since the 1860s as a trading company, and since the 1980s making passenger cars. Like a few other Chinese car companies, we grew up through the 90s and the 2000s making cars for other brands, so for Ford and Mazda principally. But actually, Changan has really established itself as a significant auto player in our own right. So about 85% of those 3 million cars that we sell are actually our own brands, which are Changan, Deepal, and Avatar. And I think the unique thing, as you mentioned, the unique piece of Changan is actually that we already have a really strong global footprint. Although we don't sell cars in Europe yet, we have had a design center in Italy, in Turin, for 20 years. We've got a large R&D center in the UK, in Birmingham, which has been there for 15 years and is a global powertrain center of excellence. And now we're using that as not only as my offices, but also as our European training center and our European technical center as well.
And Nick, I mean, that's great context for Shanghai globally and China. What can you take us through what your plans are for the UK? Because we've already said you're launching in September. Not a huge amount of time left before the launch. So what are the immediate plans?
Yeah, you're right. Not long to go before the launch. Although I've actually been preparing for this for about a year and a half. I joined Changan in January last year. Our plans are to launch the brand in the UK in September. We've set up a national sales company. I've hired a brilliant team of really experienced local people. We've been setting up in the background. The reason for taking our time is we've been setting up our parts warehouse. We've been working with Thatcham. We've been working with CAP. We've been working with the body repairers. All of the things that we need to do to make sure that when we start selling a car, that actually we're ready to support that car. That firstly, that we can access the multiple business channels that we know there are across the UK that are extremely important, but probably more importantly, that the customer can get insurance. That if that first car knocks off a wing mirror or crashes into a lamppost, then we're ready. We've got the parts available to repair that car. That the body repairers know how to do it. That all of those things that have perhaps tripped up some other brands are that we're ready for those. We've got a big marketing plan, which of course is very important. We're not a known brand today, but we're about to change that. So we're very active with a big social media campaign to sort of kick us off in the background now. We've got right-hand drive cars in the UK now, so we're starting to do media test drives, and then from September we'll do a big brand launch and really kick off the above-the-line marketing. Of course, critical to that is launching a dealer network. So I and my team have been working really hard to get that dealer network in place, and that's I'm sure that's something we'll talk a bit more about. But that's been actually really refreshing for me how open lots of dealer groups are to new brands and how interested and they are in they see the changing landscape and they're really interested to partner with a new brand as long as you've got a great product lineup, great people, and a really strong intention.
I mean, it's fascinating just hearing that bit about the coming to market, not just in terms of new front end product, the car, but actually really thinking about that infrastructure, the aftermarket, because that's, as you say, that's crucial. Making sure that valuations, insurance sector, body repair sector, and parts supply is all set up. But I mean, let's take you back to the R&D centre that we mentioned earlier, and you talked just earlier about the design centre over there in Italy, and I mean, having the R&D centre in Birmingham and a presence in the UK for that 15 years. I mean, how has that, having that presence, helped with what you're about to enter the UK with in terms of product?
It's been hugely beneficial. I've worked in this car business more than 25 years, a lot of that time in the UK, and I didn't have any idea that Changan existed in the UK. But we've got more than 100 really experienced, really qualified engineers working in the UK already. So when our first cars arrived in the middle of last year into the UK for testing, the engineer, this is the Changan Deepal S07. The engineers took it for a drive and they said, "Wow, car's fantastic. The intuitive technology, the design, the style, everything's brilliant. But the suspension does not work for UK roads. It's too soft. It's too Chinese style suspension." My immediate thought was, crikey, we've got a problem, because I grew up in the old world of car business. But the reality was they spent a month talking about it, a month doing a calibration exercise, and a month rebuilding and redesigning the suspension, and they put it into production in 3 months. That's a world I've never been in.
Yes.
And then I took the car for a drive, and a similar reaction. I absolutely love the car, but the ADAS systems were too intrusive. It was beeping and buzzing at me, and they needed work. And again, I thought, well, we've got a big problem here. And little did I know there was a colleague of mine live streaming this back to the engineers. And the next week I got an over-the-air update, and all of the systems had been totally updated. That's a new world for me, but it's an incredibly exciting world, and that's what we call China speed. That's why we can have so much product, and it's not just about okay, we've got a new car. It's every 2 years we can do a battery update to that car, and it's also we can do over the air updates on the software so that when we get a problem we can fix it, and we can fix it overnight or we can fix it within a week. And when there's an opportunity to add new features and those things, that can also be done at incredible speed, and that's for me a huge differentiator between the Chinese companies, and particularly ourselves, and the legacy brands.
Yeah, I think as you say there, I think that the speed of being able to make those changes so quickly, as you say, from your background and my time in the sector, it's just not seen before, has it? You wouldn't necessarily. It's not necessarily the time it might take to change something. It's actually the fact that they would even consider changing something that's relative to the local market. That is what is different with what's coming with these new entrants. And I mean, just thinking about as a follow up now, how big a challenge do you think it's going to be? I mean, there's a lot of happening in the UK and Europe in terms of new entrants in general. The shifting landscape of representation and market share. How big a challenge do you think it will be to establish your three brands with so much, let's say, competition in the marketplace?
Oh, I think it's a huge challenge, but that's why we're in this business. As I say, I've been here a long time, and it's always been a challenge. The marketplace has always been shifting, and what matters is great product, great marketing, a great market strategy, a great dealer network, having a real detailed understanding of how the market works, and being able to access all of those different channels. It's never been easy, and it won't be easy. But I have a lot of confidence that with the product lineup that we've got, with the backup that we've got, with the marketing investment we're going to make, with the dealers that we're able to attract so far, I've got a lot of confidence we can move quickly in this market and establish ourselves as one of the key players.
And Nick, with those three marks, so it's Changan, Deepal, and Avatar, can you explain how they'll be positioned and what drivetrains will you be launching with? Yeah, will there be EV as well as ICE?
Yeah. So the Changan group, um, as you said, combines the three brands you just mentioned. So Changan is our let's call it our mainstream brand. It's the family friendly vehicles in very very affordable price points, and those will be with hybrid and EV powertrains. Then you've got Deepal, which is our launching brand. Deepal is upper mainstream, still very affordable cars, well under £40,000 for fully loaded large BEV SUVs. And we'll move down into smaller cars as well, into the C and the B segment with the Deepal brand. And those two brands will be distributed jointly. So they will be in one showroom. The showroom will be called Changan. All of the products will be called Changan. So Deepal is a model name. So it's the Changan Deepal SO7. So there's one showroom, Changan, one set of signage, one website, one brand, one advert, etc. Just with two model ranges underneath that from Changan and Deepal. Then Avatar is our luxury sports brand. Still, really, really attractive pricing, but absolutely stunning cars, super fast, beautifully designed, and very, very high tech. And they will come towards the end of next year with primarily EV powertrains.
So I think, obviously, Nick, I mean, you've got a stated an aim to achieve a 5% market share in the UK. And, you talk earlier about that, the challenges, but obviously at the other end, you've got potentially what we might say open doors. I mean, how will that be achieved, and how long do you think that might take to achieve that market share? What sort of your time strategy on it?
I don't want to put a time on it. It's an ambition of ours to be a very significant player in the market. As I say, what matters is we've got a great range of product coming through very quickly. We need to take the time to launch each of those products carefully, but equally we'll have by 2027 we'll have a very full showroom of EV and hybrid products across a range of segments, a range of price points, and behind that a fantastic marketing plan and a really, really strong customer service plan. We've already got the parts warehouse and all of these things set up, as I said. I think from there we will push. Of course, we're a car company; that's what we do. But we do want to grow organically as well. It's not going to be, push the registrations, push the market share at any cost. It's about growing through the by doing the right things, by building up the business responsibly. And I think the market is open. I think if I look back at how market shares have actually changed in the past 20 years, people will be very, very surprised that some companies used to have 15-20% market share, and others that are now very significant used to be very small, and those dynamics actually change faster than people think. And what's happening now is you've got some legacy brands almost walking away from the market, not supplying their dealers with the right products to really go and sell. And others are demonstrating that if you bring the right things and you do the right things and you work with the right people, you can move quickly into the marketplace, and that's what we intend to do.
Now, Nick, as you said at the beginning, you've been working with the brand for 18 months. Can I ask how the dealer recruitment is going, and what size groups are you attracting to it?
Sure. I mean, that's obviously the critical thing for establishing our business in the UK, is finding great dealer partners to work with and convincing them and committing to them that we're going to be a serious player in this market, which we are. It takes time, but as I say, I'm really pleased with actually how open quite a few of the dealer groups are to working with new brands. They're very testing. They ask very detailed questions and want serious commitments on product plans and marketing budgets and after sales support and these things. But we're able to meet that. So we are aiming for 60 outlets this year. To give us a national network across about 25 partners, and that's a really critical piece for me. We're not just taking every dealer that's available, and we're not signing up a dealer in, I don't know, Northampton and then signing up another one just down the road. It's a very much a market area, a territory driven strategy, and with those 25 partners, we'll build up that national network in those market areas responsibly, so that dealers can make money. So dealers are competing against the competition and not against each other. We've got some, we out of those 60 sites, we've probably got about 40 already signed and identified, and showrooms underway. Which is a great position to be in. There's still some tricky nut to crack, the Guildfords and the Cambridges and the Bristols of this world. So there is some space in there, but I'm really pleased that we've got some of the biggest groups in the UK signed up with us, but some local heroes as well. Some great partners in places like Yorkshire and the Midlands. We've got some great local partners there who can do a really great job for us.
So your network target for this year is 60 dealers. If you were to fast forward, say 3 years, what sort of size network would you expect to have by then?
Still with 25 partners. I think a responsible number of dealers is around 100. By that time, we were expecting to be selling 40 or 50,000 cars a year. So that means a good return on investment for those dealers, a good return on sales.
Yeah.
We will keep the investment costs low as well. But I think a network of around 100 dealers is about where we should aim. But critically, it's that market area strategy, working with the same partners that we're signing up with today.
Yeah, and you say you've got 40 dealers signed up already. Are there any names you can share with us?
Not just yet. We've got LOIs in place, and we'll get some announcements out in the next couple of weeks. I'll be sure to tell you first.
Yes,
But
thank you.
we've got some great partners already, and many more that we're about to sign with.
Yeah, we'll certainly give them a shout out on the Saturday headlines when we get to see those. I'm sure it'll be No doubt some familiar names, I suspect, to ones that we do talk about. But I mean, this is absolutely fascinating, Nick. And I mean, just and finally here, I mean, we talk about those dealers that are on board, and we talk about, you're taking it very cautiously, you're selecting your dealers. We talk earlier with, potentially you're walking in with some good open doors. I mean, there is now this appetite and ambition now from the dealer network to take on these new brands and to look at what's happening ahead. I mean, what are the kind of, investment costs is always, as you know, through your career, CI costs, investment costs is always a tricky conversation with the retail network. What is it that you're, in terms of those investment costs for dealers interested in joining the Changan network? Is there anything you
Yeah.
can share?
Yeah, I can. So we take a relatively pragmatic view to dealer setup. What's critical for me is finding the right partner, finding a partner that can cover that market area, and where we can make an agreement, a plan to say, right, here's your territory, and today it supports one outlet or two outlets, but by 27, 28, then we need a third outlet in this point here. So take the Northeast, for example. We'll start in Middlesbrough and Newcastle, and that will be one territory, and then we'll add Sunderland in the middle at a later date, and we can make that plan with a partner today. In terms of the showrooms, it's a minimum square meterage of 200 square meters. That can be shared, and actually I quite like shared facilities. I think that gives us better exposure, better customer visibility. So if you share that, then you can share the handover bay, you can share the service reception, etc., and reduce the overall square meterage. And then in terms of signage, I'm not a furniture salesman, I'm a car salesman. And so it's, we'll keep the overall signage and furniture costs very low. It needs to clearly state that this is a Changan dealership. The customer needs to understand that we're a brand that's here to stay, that they recognize they're in our showroom. And it says something about our brand, but at the same time, we'll keep the costs at a really sensible level, and keep the overall investment at a really sensible level, as part of that partnership, and as part of that business case that we want to build with the quality partners.
Yeah, I think it's a great approach. I mean, they say it is a thing, as you've seen many times over the years. That initial investment cost, and they've got to think about that return. But I think that pragmatic approach, that slow approach as you build up. I mean, just as a finish around, I mean, it's fascinating. I mean, the approach of the brands in terms of that Changan and Deepal in terms of entering the market constructively is fantastic. I think generally, the strategic approach, the entrance costs is again very pragmatic and very strategic to enter the market. So it's, I say, fantastic. And from my perspective, just this brief 20 minutes having a chat with you, thinking about obviously the approach from Changan into the UK has been very enlightening and very, very interesting. I'm sure the listeners will feel the same. So huge thank you from me, Nick, for joining us today.
Thanks so much for having me on. It's been great to talk to you, and I look forward to giving you some more updates soon.
Yeah, we'll definitely get back to you on that, Nick. It'll be fascinating to see who you have signed up and how the launch goes. But until then, many thanks, Nick, for joining us, and good luck with the launch. And many thanks for listening to this episode. So until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.